to present a few insights about the related party under IBC. Am I audible?
Yes, ma'am, you are
Uh,
audible.
okay. Uh, I thank the ICSI IIP giving me this opportunity to present views on the related party transactions under IBC and Companies Act. I'll just quickly add on whatever you have mentioned about me. Currently, I am functioning as the resolution professional of Carvi Data Management Services Limited, and also voluntary liquidator in one of the voluntary liquidation assignments. And I am a partner in Easy Resolve LLP, where we have handled close to 40 assignments under IBC. So with this brief introduction, I welcome all the participants to this workshop on the perspectives on IBC, which ICSI IIP has organized for celebrating the Women's Week. And I feel very delighted and proud to be part of this program. And good afternoon all. Welcome you all to this presentation. So we'll touch base upon the related party concept from the Companies Act. From the Companies Act, we'll just have a quick overview, but we'll focus more on the IBC perspectives. Anjali, will you share the PPT or you want me to share the PPT?
Ma'am, it will be better if you will share the same.
Okay, fine. Uh, my PPT is visible to all the participants. Anjali, my PPT is visible?
No.
No. Hope it's visible now.
Now it is visible.
Ma'am, it is visible now.
Okay. So I'll just mention a phrase, a proverb which says, eat with your relatives, eat and drink with your relatives, but do business with strangers. So this, I just start with this proverb. Yeah. So this PPT, I'll be covering the related party concept under Companies Act, and related party, what are the IBC provisions, and related party and the role of COC and claims, and the related party concept in the resolution plan, and the avoidance transactions, and we'll touch base upon the few important judicial precedents regarding the related party. So basically, the related party concept as a part of like company secretaries, yeah, insolvency professionals, and professionals, we come across the related party concept in Companies Act, in Income Tax Act, in SEBI provisions, in listing agreement, even in IBC. But wherever we have seen a definition of related party, the uh, concept of related party is very widely and broadly covered under IBC. So IBC has brought in all the kind of relations for an entity, for an individual. The ambit of related party is very wider in IBC. So under Companies Act, as The definition of related party transaction is the related party with reference to a company under Companies Act Section 276 is a person who is a director or his relative or even a key managerial person of the company, and a firm in which the director or manager of the company or his relative is a partner, and even a private company in which a director or manager or his relative is a member or director. So public company in which a director manager is a director and holds along with his relative more than 2% of its paid up capital. Here there is a cross directorship is required. A public company in which a director or manager is a director, so, and holds along with his relatives more than 2% of its paid up capital. That means a cross directorship along with the 2% of paid up capital is the criteria. And any body corporate whose board of directors or managing director or manager is accustomed to act in accordance with the advice and directions, instructions of the director. So this is a very broad concept where the based on the facts, the company will take into consideration whether the board or MD or manager is accustomed to act as per the advice of directions of a director, on whose advice the director or manager is accustomed to act. So there are many case laws settled in this regard, except if given on professional capacity. Then again, this proving the uh, base of professional capacity is again on the party. Then again, any body corporate which is holding subsidiary or an associate company of such company. A company which is a subsidiary or holding company of a company. Say suppose company A has a subsidiary B, and company A is a subsidiary of holding company X. That means for X, A and B are a related party. An investing company or the venturer of the company. Even a company comes and invests in the company, or any venture capitalist or a venturer comes into the company, it's a related party transaction. So the company act often deals with the parties who are familiar or who has a common interest. So the related party transactions refer to any contracts or arrangements which are made between two parties who are joined with pre-existing business relationship, which they have a common interest. So to establish a related party transaction, so the relation should be, they should have a common interest. So the section 188 of the Companies Act read with rule 15, uh, the rules of the company's meeting of board and its powers rules 2014, some threshold limits are prescribed for the nature of contracts or arrangements with the related parties. So some of them I've covered in the like I have covered in the PPT. The contracts or arrangements with related parties, like sale or purchase or supply of any goods or materials to the company. The threshold is 10% or more of the turnover in the preceding financial year, where audited financials shall be considered for computing the turnover of the net worth. Even leasing of property of any kind, selling or otherwise disposing or buying property of any kind, even if there is a contract or arrangement with the in the company for selling or disposing or buying of any property of the company, if there is any contract or arrangement with the related party, the threshold limit is again 10% of the net worth of the company. This is not turnover, this is net worth, because it's involving property in kind. Then availing or rendering of any of the services, if any services are engaged with the related parties, then again the threshold limit is 10% of or more of the turnover. And even a company appoints any agent for purchase or sale of goods, material, services or property, then again the threshold limit is 10% or more of the turnover. So such related party appointments to any office or place of profit, its subsidiary company or associate company, then if we are appointing any professionals to any office or place of profit in the company, even it including its subsidiaries and associate companies, the monthly remuneration is exceeding 2,50,000. This is the threshold limit, and the kind of approvals permissions required we have touched in the next slide. So even the underwriting the subscription of any securities or derivatives of the company, if we have entered into any underwriting agreement or subscription agreement for any of the securities or derivatives of the company, the remuneration to such agency is not exceeding 1% of the net worth is the threshold limit. So for entering these kind of transactions, there are certain kind of approvals from the board of directors and shareholders. So transactions between related parties that are not in the ordinary course of business or not transacted at arm's length will require prior approval of the board. So here these kind of transactions which are not done in the ordinary course of business and not done at arm's length, we need to take prior approval of the board. In addition to the board's approval, a special resolution is also required if a transaction between related party exceeds that threshold limit which we have discussed in the above. So what happens if board approval is not taken or shareholders approval is not taken? So without obtaining the consent of board or shareholders approval in the general meeting, the same can be ratified by the board or the shareholders at a meeting within 3 months from the date on which such contract or arrangement was entered. So this can be ratified, but the time limit is again within 3 months it has to be ratified. So if a contract is not ratified, the contract or arrangement is voidable at the discretion of the board or shareholders as the case may be. So whenever the directors or shareholders are interested in such contracts or arrangements where the board meeting or shareholders meeting is held, so the members who are related parties or the board of directors, they may not vote on any resolution. They will not have they will not vote. The interested party has to abstain from voting. So there are some exceptions for two kind of transactions. One is in case of a private limited company. If the member of the company is a related party, he may vote on the resolution. And the other is a resolution is not required for a transaction between holding and its wholly owned subsidiary whose accounts are consolidated with the holding and presented as per the consolidation. When there is a consolidation of holding and wholly owned subsidiaries, then this is an exception for taking the approval. So regarding the related party transactions, usually companies obtain disclosures. One is the company will disclose the related party transactions in their board report as per Companies Act 34, section 134. And the disclosure of the interest by the director is they submit this in the form MBP1, which will be taken. The disclosures are taken annually from the directors, taking all the details where they are directors. So even the Indian accounting standards prescribe some certain information which has to be disclosed in the financial statements. Some of the disclosures are like nature of relationship and what kind description of the transactions, what is the amount due to and from related parties, the pricing policies taken for these related parties transactions. So this is basically I just covered very few concepts about the related party under Companies Act because we'll focus more on the related party under IBC. This is a small chart which shows the related party concept under the Companies Act. So I'll start with the related party transactions under IBC, Insolvency and Bankruptcy Code. So related party in relation to corporate debtor. So we'll be touching the related party concept under IBC. So the related party is to the corporate debtor. Corporate debtor is a company which is undergoing CIRP process as per the provisions of IBC. So the related party context, we will cover some relevant provisions under IBC, and where IP has a role, like a related party, and in constitution of COC, verification of claims, constitution of COC, and one more is resolution plan submission and the related and connected parties, avoidance transactions. Then we will also see the look back period for the related parties under IBC and few judicial pronouncements. So legal provisions on related party, we have basically the definition of related party comes under section 5 subsection 24 of IBC. This is a related party to corporate debtor. So related party to corporate debtor means a director or partner or key managerial person of the corporate debtor or any of their relative. That relative definition will again come back in the coming slides. So if the director of the company, partner of the company, corporate debtor or the key managerial person, they are related party. Holding associate subsidiary of the corporate debtor or a subsidiary of a holding company to which the corporate debtor is a subsidiary. Here, the related party is lineal, and the lineal ascendants are also covered. And like for a company, you have a holding company, you have an associate company, you have a subsidiary company. So all these companies become related party to the corporate debtor. A private company or a public company in which a director, partner or manager of CD is director and holds along with his relatives more than 2% of its paid up capital. Here again, as we discussed under Companies Act, the cross directorship is the condition criteria. So the director of the corporate debtor is also a director in a public or private company in which a director or a manager is also a director and along with his relatives holds more than 2% of its paid up capital. So the cross directorship along with 2% of its paid up capital to qualify for the related party definition. Then an LLP where a director, manager, partner of the CD or their relative is a partner. Here, if a corporate debtor director is also a partner in an LLP, then that LLP along with its partners also become related party to the corporate debtor. Here, an LLP where a director, manager, partner or their relative is a partner. Here, it's a partner. Even if he is a sleeping partner, not active partner, also qualifies as a related party. And the other one is any person holding 20% of voting share in the CD or the CD holding 20% voting share in any person. That means the corporate debtor is any person is holding 20% voting share in the CD, and the corporate debtor is holding 20% or voting share in any other company or entity. That entity or company also becomes a related party. And these other two are controversial, where many NCLT cases were filed and adjudicated. That is, any person on whose instructions a director, manager or partner is accustomed to act. So here some of the judgments, NCLT case laws we will discuss in the current once we go to the next few slides on the judicial precedents, we will discuss about this concept where NCLT has interpreted what does it mean, on whose instructions the director or manager is accustomed to act, and any person who can control the composition of the board of directors. So here any person who is controlling the composition of the board of directors of the CD is also a related party. So this is a definition of related party to corporate debtor under section 524. So we'll come to another section, which is section 524A, which was inserted via amendment June 2018. This is related party to individual. So related party of individual means a relative of individual or relative of the spouse of the individual. Say suppose we have director editor. His relative or relative of his spouse is also a related party. And a partner of LLP or a LLP or a partnership in which the individual is a partner. Like for example, person A is a director in the company. Person A is a director in the corporate debtor, and A is also a partner in an LLP. Then that LLP or a partnership firm where this person A is a partner, that LLP, the partners of that firm will also become related party. A person who is a trustee of a trust in which the beneficiary of the trust includes the individual or trustee exercise powers bestowed in him for the individual. Here, for example, company director A is also a trustee in a trust, or he is a beneficiary of the trust. This includes the individual who are trustees of the trust also becomes the related party to the corporate debtor. And a private company or public company in which a director, partner or manager of the CD is a director and holds along with his relatives more than 2%. So basically again here it's a cross directorship along with that 2% of its paid up capital. Then again an LLP and their relative is a partner. Then one more is any person holding 20% of voting share in the corporate debtor or the CD holding 20% voting share. So we'll come to the definition under related party under IBC. Relative means member of HUF and husband or wife or father or mother, son, mother's father, mother's father's brother, sister, mother's brother. So wherever the relation is that of a son, daughter, sister, brother or their spouses, that will be included. So here the concept of this definition of relative is important to understand for the he is constituting the CD while after verifying the claim. And the concept of related party is very critical when a plan is submitted during the CIRP process. So here the lineal ascendants and the lineal ascendants are covered. Like the 5 generations are covered under the relative definition of under IBC. Like sons, son, daughter's son, sister, brother, their spouses, daughter, then son's daughter and son, daughter's daughter and his son. grandson's daughter and son, or brother's son, daughter, or sister's son and daughter, father's father and mother. So if we have to see this definition, it's five generations are covered. So we'll just cover how the related party transaction concept, and also the evaluation of the related party under IBC. So the related party transactions are transactions between two parties where they have a pre-existing relationship with each other. The concept of related party transactions, which are entered by the company or entity with its related party treatment, and such transactions are very keenly regulated by the regulators, because in the interest of the corporate governance, the related party transactions are regulated. And the revenue and the economic laws, they have the concept of related party, because the identity of the company and the individual, they should be separate. The business and the company should be kept separate from the related parties, and if any related party has any benefit, that has to plow back to the company, is the intention of the various legislations for including the related party definition. So here the relevance under IBC is also important, the concept of related party. The IP insolvency professional, the RP has to be very careful during the entire CRP process, as the three critical areas where RP need to be analyzing the related party transactions, that is while receiving the claims, constitution of COC, verifying the claims, and when the resolution plans are submitted, and even examining the avoidance transactions of a corporate entity. These are all important during the insolvency proceedings. So when we come to the avoidance transactions, these can be taken up with related or unrelated parties. So it is here interesting to note that a significant number of cases are filed with tribunals for determination of avoidance transactions. So, for determining whether the alleged transaction with its related party was conducted in the ordinary course of business of the CD, Supreme Court analyzed this unique nature of relationships, and the code also provides the avoidance transactions in order to protect the creditors. The regulation 35A of CRP regulations, the RP is entrusted with a duty to review the CD transactions for the look back period, to identify and file necessary application with the adjudicating authority on these avoidable transactions. So basically, I was just reiterating, I will reiterate once again, the concept of related party practically comes in 4 or 5 areas where continuously RP need to monitor on the related party transactions in the CRP process. So once the CD is admitted into CIRP, IRP issues the public announcement inviting the claims from the creditors, and while submitting the claims in the form C, there are 4 types of creditors who submit the claim to the interim resolution professional in response to the public announcement issued. So the forms will be submitted. Basically, the form C is submitted by the financial creditors of the corporate debtor, which has a declaration in the form which says whether the CD is a related party. So this confirmation has to be filled by the financial creditor. So whenever IPs are receiving the form C, they have to ensure that this declaration is properly filled, and whatever relation the FCs have, they have to uh, uh, give in that declaration. So the object, basically the IBC prohibits inclusion of the financial creditors into the committee of creditors by way of section 21(2), subsection 2. Related party of the corporate debtor who is a financial creditor will not have any representation or participation, or they cannot vote in the meeting of the COC. So to ensure this, the RP has to exercise certain caution. But when Form C is filled and received by the IRP, they have to verify whether related party details are filled. And once the list of creditors is prepared by IRP, it is better that as a practice in our cases, what we are doing is we are sending a mail to the financial creditors to once again give a confirmation that we are reconstituting the COC. If you are a related party, kindly confirm. If not confirmed, then you are treated as unrelated. So basically, why IBC prohibits the inclusion of the financial related party financial creditors into the COC is when the external creditors, the process is creditors driven. So the object is to the CARP process to be best served is when it is driven by an unrelated creditors, so that COC is not sabotaged by the related party influence. And basically the IBC also attempts to balance the interest of all the stakeholders, so that not some of the stakeholders who are interested to the CD will be benefiting at the expense of others. That's why the disqualification is on the related parties. The IRP has to carefully examine the claim of the financial creditors and not to include the related party creditor in the COC. This is one of the very important role of the IP. So if any related party is included in the COC, then it has to see, RP basically has to ensure from all the available sources to find out whether the FC is a related party of the CD. This is one concept where under IBC the IP has to ensure that related party is not included in the COC. So basically, why the IBC prohibits, and even some of the NCLTs have clarified that the related parties involved, they will disengage the purpose and object of the CD. So if the related parties have certain interest over CD, they can influence the outcome of the process. So in one of the in NCLT cases in Jaipur bench, Sushant Aneja versus JD Aneja Edibles Private Limited, it was held that the nature of transaction between the corporate debtor and the related parties could not be equated between the transaction of the CD related party and an outsider, because the related parties are always in the compromising position. So the related party can influence and compromise the CD to do the transaction. And if related parties are included in the COC and they have decision making power, they will lead to a differential treatment and of the creditors, and the objective of the CD, the objective of the process of the IBC will be abused. So the purpose of prohibiting the related party is so that no adverse effect will be there on the genuine stakeholders. So the issue was again answered in the Phoenix ARC case. So we have one case, Phoenix ARC case. Here the matter was with the NCLT. Then again the appeal was filed against the NCLT order. Then again the matter reached the Supreme Court. So here there are two financial creditors who are included in the which were they were included in the COC. So NCLT, the RP filed a application here. So the adjudicating authority has held that the Spade and the AAA Landmark Private Limited, these two financial creditors were included in the COC. So the NCLT has excluded them from the COC, and as they were related parties. Then again, an appeal was filed against the NCLT order. Here, the appeal was filed against the NCLT order, which was dismissed by NCLAT. So here, the NCLAT has held that these both are financial creditors. So again, the matter reached Supreme Court, where the Phoenix argued that though the NCLT correctly dismissed the appeal filed, they are they are related parties and hence to be excluded. There is an erroneous finding that they are, again in the appeal they were noted as financial creditors. So the issues which came up before the Supreme Court was whether Spade and AAA Landmark are financial creditors or and they are related parties and they have to be excluded from COC. So here the Supreme Court has held a transaction which is a sham or collusive and only creates an illusion when in fact the parties enter into a transaction with an ulterior motive to just uh, to classify them as unrelated party. For the real nature of the transactions must be identified so that it will not cause any detriment to the legitimate rights of the creditors. So a collusive transaction cannot lead to the creation of a financial debt. So here the court held that there was a collusive relation between these two creditors and they are not a financial creditors. As NCLAT has held, they are financial creditors. So Supreme Court held these transactions which were done by these two companies were only a sham and collusive in nature. So a collusive transaction to create as if it's a financial debt, and the transacting parties, Supreme Court held that the transacting parties are not financial creditors. That is the AAA and the Spade, they are collusive and they are not financial creditors. So the definition of related parties under section 524(24)(a) is very broad and it describes the commutative relationship. So the intent of legislature to make this definition exhaustive is to capture all kinds of interrelationships between even if the financial creditor and the CD. So the related parties must be clearly identified at the constitution of COC stage so that the CRP process is not negatively affected. So then in the Phoenix case, the rationale for 21(2) is to ensure that COC is not sabotaged by the related parties. And the default rule under section 21(2) that debars the related parties, the FCs are related parties in present. So those related parties that cease to be related parties in order to circumvent and exclude from see here the AAA and Spade has devised a mechanism to remove its label so that they enter the COC and they were in the influential position of decision making. So accordingly, the Supreme Court has dismissed the appeal, the NCLAT order, and the Supreme Court set aside the NCLAT order and saying that Spade and AAA are not financial creditors and they are related parties of the CD and they are to be excluded from the COC. So any questions till now? So anyone has any questions till now, or they want to share their experience?
Madam, you may want to also cover the declarations that RP has to make do in respect of the relationship with qua the advisors and the people he employs in the CR process.
Yes, sir. That one point I'll cover, sir. See,
Yeah.
basically, whenever as an IP, we have to file relationship disclosure with the IPA, respective IPA, Insolvency Professional Agency, either it is ICSI IIP or ICA IIP or ICCWA IIP. The insolvency professional has to file the related party disclosures. You mean to say the same thing, sir?
Yes, yes, absolutely.
So this is whenever see, an IP is also required to file his related party disclosure when after immediately after appointment, and whenever IP appoints any professionals, so the IP has to within 3 days file a disclosure with IPA, stating what is the relationship between with the corporate debtor. IP has any relation with the corporate debtor and the professionals appointed during the process. And whenever the prospective resolution applicants come in, and when valuers are appointed, transaction auditor are appointed, the respective format declarations we have to take and file with the respective IPA. Any more questions, sir? Any more questions or experience which any member want to share? So we
Well,
have covered one aspect, okay. So we have covered one aspect of related party, that is during the constitution of COC and verification of claim and filing of relationship disclosure by the insolvency professional. So basically during the process under section 28, resolution professional has to take approval from the committee of creditors for certain transactions which RP has no authority to take up. So in many of the companies, the company will have to do some transactions with the related party, which are unavoidable. Like for example, I am a resolution professional of Carvey Data Management. We have close to around seven. We have 7 subsidiary companies and 6 parent holding companies, and we have many affiliate companies. So the company was doing in a large scale. They were into financial services, and we had the offices across India, and many of the offices were working on shared services agreement basis. So even the property is taken on lease by one company, the other companies also were using the facility based on the shared services agreement. So now during the CRP process, now we are having a transaction with related party. So basically all these transactions, what I have done is I have placed before the COC that these are the places where we have the shared services and we are doing these transactions with related party. And we wherever when we incur any financial, there is a financial implication, we have to take approval from the COC, or if there is no financial implication also, it is better that we bring to the notice of COC. So basically the second concept here is section 28(1)(f), which says that the related party transaction cannot be undertaken by RP during the CRP without the knowledge and approval of COC. The COC has to approve by 66% voting rights. So here recently in one of the case, the NCLT Delhi has held bench 2. in Hemalata Hospital's case, can RP terminate agreement with related parties during CIRP? Held, yes. If it is in the interest of CD, the RP can always go back to COC and terminate the agreement. So here, one question which was answered by NCLT is the related party agreement can be terminated during CIRP if RP recommends and COC approves. Then again, one more question came up before bench in this case is whether on approval of the resolution plan, the successful resolution applicant is empowered to terminate the related party contracts or agreements. Here also bench held yes, because once the resolution plan is approved, the terms of resolution plan, as per the terms of resolution plan, there was a clause which said the SRA is empowered to terminate the related party. So it is noticed that resolution applicant has sought termination of the lease and service agreement. So based on the judgment of IDBI Bank versus JP Infratech and SBI versus Bhushan Steel, the related party contract can be sought to be terminated via the relevant clauses in the resolution plan. So when the resolution plan is approved, automatically the RA can ask the can go for the cancellation of related party contracts or agreements. So here in this Hemalata case, instead of COC not giving approval for termination of lease deed or agreements, it has given consent by approving the plan. So in the commercial wisdom, the plan was approved. So hence bench found that no illegality committed by terminating the service agreements with the related party. So I just wanted to bring in some practical aspect here. In the Ruchi Soya case, I was reading the experiences shared by the RP on the related party transactions. So for the operational dependence of the CD on the related parties, so the RP has to take approval for the transactions during the CIRP, because the CD was completely dependent on the related party to execute some the contracts, because the storage tanks and the crude oil pipelines were between the port and plants. So for the CD to operate smoothly, they have to have some agreements with the related parties. So considering the nature and business and continuing the services for storage or rental for maintaining the business, so RP has he has reviewed the contracts of the CD and also visited the sites, and he held the meetings of the representative of the suppliers. They were related parties. So he has benchmarked, and also he has benchmarked the market price for these transactions. So he has placed before the COC and obtained the approval periodically whenever the transactions were undertaken, and these were done at a arm's length price. So in my case, in Carvi, we have shared service, as I was mentioning, we have shared services agreements, and we have data service center, which we are using for the entire group companies, for which we are supposed to pay some lease rentals to the related party for using the data center, and some network agreements, and even some of the holding company premises we are using for operating the services of the CD. The CD, the where I am functioning as IRP, the CD provides some of the critical services of the citizens of India, like we service Aadhaar based services and SEBI KRA, and the PAN quarterly annual TDS PAN corrections, and we provide support to income tax department. So we are operating some of the critical functions of the country. So it was appraised to COC that in the present condition, the requirement for the entire data center until some plan comes up. For an alternative plan, it is better that some of the services we are continuing with the related party. And for shifting the data center also, we have the only the servers of the corporate data. We planned an alternative network. Then I've come across that there is an ED attachment and the status quo is to be maintained. So we are moving application to NCLT for suitable directions. So here I just want to mention that even the related party transactions, if it is just incurred also, even if it is continuing without any monetary, like even no financial implication to CD, the same has to be presented to COC. So basically in our case, we have 100% subsidiary company, which is providing network and software support to airports of India, various airports. So that subsidiary company provides networking software and AMC support to some of the big companies. So that subsidiary company wanted to bid for one of the government projects and they wanted some loan from the parent company. The parent is the corporate debtor where I am functioning as a RP. So the subsidiary has come up with a request for loan. So I have placed this before COC. So even any change in the in one of the 100% subsidiary, there was a proposal to appoint one of the professional directors. So even the same we have taken, it's being a 100% subsidiary, we have taken it to the COC of the holding company, because we are the shareholder, we are supposed to vote at the general meeting. So I have to take instructions from my COC to vote at the general meeting of the subsidiary. So for taking any related party transactions or make any change in the management of the corporate debtor or its subsidiary, the RP has to go back to COC and take 66% approval. So I was just explaining the few concepts about where practically we come across the related parties. So the other important area where the object of CRP process is the resolution of the corporate debtor. So for the resolution of the corporate debtor, the insolvency professional, the IRP or RP will be receiving the resolution plans from the from the prospective resolution applicants. So the prospective resolution applicants will bid for this company. So when RP calls for the resolution plan from the investors or the resolution applicants, it's a proposal for buying out a company of a corporate debtor which is undergoing CRP process. So whatever the plan amount comes, it will be distributed among the creditors in accordance with the resolution plan given, approved by COC and NCLT. It will be paid to the list of creditors for the claims received in the process. So basically here there is section 29A which was introduced by an amendment in 2018 to the code. Here the section lays multiple criteria for ineligibility of the resolution applicants. So it's ineligible, some of the conditions which are prescribed in 29A, these are the ineligibility criteria for a resolution applicant to submit the plan. So who is a person who is related to the corporate debtor is disqualified under section 29A. So here again the list of related parties is very extensive, and it includes the directors, partners of the CD, their spouses, related entities, associated entities, and the entities which hold its share capital in the CD or group companies, and also the related parties who the directors on whose advice these people or the entities act. So basically here the section 29A is also very extensive. The practically the resolution professionals are doing is they are taking a declaration from the prospective resolution applicants. There's some formats as per the regulations and as per the section. We give details of all the relations which are there in the code and ask them to fill all those details. Or basically at the expression of interest level, we are taking a declaration and undertaking to include the in the list of prospective resolution applicants. So basically there are two process in the CRP process. One, RP has to issue a prospective resolution applicant list. So in the prospective resolution applicant, this level we are taking a declaration from the prospective resolution applicant saying that he is not a related party to the corporate debtor. At the next level, when he submits plan or before submitting plan, we are taking a very detailed declarations from the prospective resolution applicants on the details of the related parties. Also, RP is required to do the due diligence by appointing a third party vendor for the due diligence to find out whether the prospective resolution applicant is a related party. So basically, I just want to touch base on the Anil Ambani case here, which is a slightly a different view court has taken. So basically, here the NCLT view, NCLT is taking a serious view to include the related party in the committee of creditors, whereas NCLTs are taking a little lenient view for related party to submit the plan. So again, it depends on the facts and the interpretation and how the NCLTs view and how the parties present to the NCLT. So the view of NCLTs are little lenient when comes to the plan. So when we come to Anil Ambani case, here in on 3rd December, the CRP is initiated against Reliance Infratel in the NCLT Mumbai bench. So the resolution plan was approved, which was submitted by Reliance Digital Platform and Project Services through its infrastructure projects. So here basically the Reliance Infratel is Anil Ambani company and Reliance Digital is Mukesh Ambani case. Mukesh Ambani. So here if we just discuss here on a basic, if we assume, if we see basically on a preliminary view, we will come to a conclusion that he is a related party as per section 29AJ. However, this plan was approved by committee of creditors. See, basically here a person, 29AJ says a person shall not be eligible to submit a plan if such person has a connected person not eligible under section 29A, A to I. So which is related party. Here on preliminary view, if you see Mukesh Ambani and Anil Ambani are falling within the definition of section 29A. So in the section 29A due diligence, the related party or connected parties we have to check. So they are connected parties and related parties. So a person who is relative of the individual or the relative of the spouse of the individual, that means here Anil Ambani and Mukesh Ambani fall under this definition. But when the court was settling in the present case, it most significantly, see, they have considered Swiss Ribbons case. See, as a precedent for this case, the court dwelled on the significant judgment in this regard, that is Swiss Ribbons versus Union of India, where validity of section 29AJ was questioned. So when where the related party is barred from putting forward a resolution plan, even when such a person has no business connection. So here the coin word is business connection. So basically the court interpreted in Swiss ribbons and in this Anil Ambani case is no business connection. Although they are technically like they are related, but the both the corporate debtors and both of them were in no business connections. So the court in the para number 17, 75, it has held related are subject to nociter solis, where they would be bound by interpretation, and in the opinion of the bench would include only persons who are connected with the corporate debtor in terms of business activity. That means they are not having any business connections, no business activity, common for both of them. So basically, whenever the RP is ascertaining the related party or the connected persons, he has to check all the litigation checks and also regulatory checks with the third party vendors. So there are cases where NCLT has given decisions on the participation of related parties in the resolution process. Like in Ruchi Soya case, when you take Adani Wilmar, who was declared as the highest bidder by COC. The Patanjali, the second highest bidder, raised a claim against Adani Wilmar, saying that he is ineligible to contest in the process. The basis is wife of MD of Adani Wilmar was the daughter of the promoter of the CD. So this is one. And the other in SR Steel case also, the bidders were held ineligible in the context of related party clause. That is, the Revant Ruya, the son of SR Steel, was the beneficiary in New Metal, and Arcelor Mittal was owner of 29% stake in the defaulter Uttam Galva. However, Supreme Court has held that if the applicant clears of all its dues, then they become eligible as resolution applicant under section 29A. So in one of the case in Pankaj Yadav versus SBI, the adjudicating authority has taken consideration of various facts and circumstances and observed that a meticulous plan was made by the director to execute an assignment deed, so that with a sole intention to get the SBI voting reduced, so which cannot be done as a natural course. The party has done in an otherwise way, for reducing by way of an assignment deed, it has reduced the voting rights of SBI. So the adjudicating authority has observed that a related party cannot suddenly become a non-related party just because of the assignment. So basically, the regulatory checks for the related parties through SEBI, CIBIL, MCA, NCLAT orders, all this through third-party due diligence reports we can get before preparing for the due diligence of the plans for the related party. So even SEBI for the listed entities for the CD who are undergoing the CRP process, the latest norms have come with effect from April 1st, 2022. So here the direct and beneficial holding and even the coverage of the shareholders, the promoter group of the listed companies, then again influential decisions of the listed entities and significant holding, and also the threshold limits for determining the materiality for related party transactions, some the 1,000 crores or 10% of the annual consolidated turnover of listed entity as per the latest audited financial statements. So all these have come for the listed entities, which an RP of a listed company has to ensure all this during the CRP process. for any related party transactions during the CIRP. So in one of our case, see, even there is an exception. The related party of an MSME, that is an MSME promoter, can submit a resolution plan. So even if he's a related party, so but there are exceptions. See, pursuant to section 240A, the resolution applicant submit a plan if he is a promoter or related party of IBC, that is exception to prepackaged and prepackaged insolvency process and MSME. So, but there are two exceptions. Even if the MSME related promoter can submit the plan, there are two exceptions when is declared when he is a promoter or director of a CD where the CD is declared as an NPA, and in case the promoter has given a guarantee and to a CD and there is a CRP process initiated against that CD, or a personal insolvency resolution process is admitted against that promoter, he cannot submit a resolution plan. So any questions so far, sir? Any of the participants have any questions?
Please proceed.
Yeah. Okay. So, assignment of debts of related parties under CIRP. So basically the preamble of the code is to maximize the value of the CD in the interest of all stakeholders and not for some of the stakeholders at the expense of others, that is for the related parties. So this is very relevant in respect of the related parties to the corporate debtor. If the related parties are given power to control the decisions, they may choose to do which is unfair to other creditors or other stakeholders. So although the code prohibits related parties from taking an active part in the COC, there is a lack of clarity on the position of unrelated parties to whom debts of related parties have been assigned. So there is a clarity here, sorry. So there is a slight correction here. So even assignment is done by a related party to just make them as an unrelated. Now the Supreme Court has made it clear that even the assignment of debt is done, the assignee is also a related party if the prior to assignment the assigner was a related party. So here under regulation 28 of CRP regulations only stipulates that when there is an assignment from one creditor to another during the insolvency process, both the parties have to intimate to IRP of such assignment and give the details of transfer and identify the details of the assignee or transferor to the IRP or RP, and within 2 days IRP has to modify the list of creditors and file the list of creditors with IBBI NCLT and also reconstitute the COC. So assignment of debts of related party. Here there are some interesting judgments of NCLT Hyderabad and NCLT Mumbai. Then again the correct view was held by the NCLAT. Here in case of Edelweiss Asset Reconstruction versus Synergy Durai, this case is related to assignment of debt from one FC to which was a related party by virtue of being a sister concern of Synergy Durai to a third party, effectively providing with a place within the COC. So it was contested by Edelweiss that this assignment was carried out with an ulterior motive of reducing the voting rights of other creditors by making the assignee eligible to take part in the vote in the resolutions in the COC. So here the NCLT Hyderabad, while observing the assignment of debt, it is only considered that this was done for tax planning. So it held that since there was no relationship between FC and third party assignee, the assignee could participate in the COC. So this was held by NCLT Hyderabad, but immediately within 3 months, this judgment was in August 2017. But within 3 months, November 2017, Fortune Pharma Private Limited, where two related party financial creditors, after filing application, carried out a similar assignment to an unrelated third party. In this case, the NCLT held that a disqualification as existed at the time of initiation of CIRP, virtue of being a related party, cannot be washed away because of just assignment of debt. So here NCLT considered the bona fide of the transaction for in conquering the both the bench members held that assignment was only transfer the rights of the assigner and the assignee, and this was only done that would disadvantage the other creditors. So if the assigner is a related party, then the assignee shall also be treated in the same status as related party. So again, here these NCLT Hyderabad, NCLT Mumbai, both of them has a contrary views. So again, the same subject matter was before the NCLAT in 2018, exactly after 1 year. So in Pankaj Yadav versus SBI, so this controversy was led to rest, which accepted the reasoning and held that undisputedly the assignment is the transfer of one's right to recover the debt of another person for contractual rights. So rights of an assignee are no better than those of the assigner. So it can be held that assigner assigns its debt in favor of the assignee, and the assigner steps into the shoes of the assigner. So the assignee thereby takes over the rights, all the rights, all the disadvantages by virtue of such assignment. So whatever cannot be achieved directly, they were indirectly achieving by assigning this debt. So here it held that the appellant, the one of the director FC, so they held, FC, they held that the related party has assigned the debt to cause the disadvantage to the other creditors. So here the NCLAT has clarified the assignment of related party debts result in the assignee having the same rights and disabilities of as that of a related party assigner. That means if at the time of assigning the debt, the assigner is a related party, then the assignee also becomes a related party. So I just explained some 3-4 concepts of related party under IBC. Then the one of the critical concept in the IBC is avoidance transactions under section 43, 45, 49, and fraudulent transactions under section 66, which is one of the responsibilities of RP to examine, determine, and also after determining, he has to file an application with the NCLT to adjudicate on these avoidance transactions. So can we have a small quick break for 10 minutes? Anjali? Anjali ma'am?
Ma'am.
Anjali ma'am, can we have a quick small break of 10 minutes?
Yes, ma'am, sure.
So we'll assemble around 3:40 or 3:45. What you say?
Okay, ma'am.
Yeah, you can announce. So we'll meet around 3:45. We'll have a small short break and we'll meet around 3:45.
Yeah, thanks.
Yes, ma'am, sure.
Uh, Welcome back. Anjali, can we start? Anjali ji?
Yes, ma'am.
Yeah. Uh, So we'll start with we have before the break session, we have covered various aspects under IBC where IP has to exercise the diligence when while verifying the claims, list of creditors, constitution of COC, and on receipt of the EOI resolution plans, how RP has to exercise the diligence for verifying the related party aspect. So one of the other important aspect for the related parties are avoidance transactions under section 43, 45, 49, and for the fraudulent transaction section 66. So one of the duties of a RP or liquidator is to examine and identify if any transactions have been undertaken by the corporate debtor which qualifies as a preferential transaction, undervalued transaction, extortionate transaction, or transactions with an intent to defraud creditors or for any fraudulent transaction. So this is the scope where RP has to examine and identify and determine on these transactions for necessary orders by the AA to get back the benefit to the corporate debtor. So if this is avoidance transactions are to be examined by RP and even the liquidator during the liquidation process. So if RP or liquidator is of the opinion that any avoidance transactions have occurred, then he is obligated to file a IA and he has to report the same to the adjudicating authority for necessary directions. So if the impugned transactions are adjudicated to be an avoidable transaction, then the AA may issue necessary directions for reversing such transaction and directing the beneficiaries of such transactions to return back the benefit what they have acquired and return any property or the interest beneficial interest which they have got. This they have to return back to the corporate debtor. So certain categories of avoidance transactions are particularly relevant in the context of related parties. Here the look back period has to be verified. So the look back period for such transactions for a related party is 2 years, and for the unrelated party it is 1 year. So the UNCITRAL legislative guide on insolvency law also acknowledges examining these transactions entered by the CD with its related parties with greater scrutiny. so that the perspective of identifying these avoidance transactions are reported. And the legislative guide also recommends a longer look back period for transactions entered with the related parties for the avoidance transactions. So again, the transactions for look back period for the related parties, the within which specified time these transactions have taken place, the period prior to looking back from the date of commencement of CIRP. See, the cutoff date is the commencement of the CIRP. From there, the look back period is the back period. Um, so basically, what practically we are doing is the look back period we are prescribing for the transaction auditor scope is 2 years. But when the company has not audited its financials, and the company has a lot of group companies, like for example in the case where I am functioning as RP, the company has a lot of group companies, associate companies, and all the transactions are done with the group within the group and entities. And from 4 years there is no audit process taken up. So we have here we have considered the look back period as for the transactions we are advise the transaction auditor to look the transactions for the period from when the audit was not done. So that is 4 years. So even the bankruptcy reforms committee in its report has expressly observed that there should be stricter scrutiny for transactions of fraudulent and the scrutiny of these transactions with the related parties. So the look back period with these for these transactions to be longer. So whether the transaction is an avoidance transaction or not is a mixed question of fact and law. So we have to examine the transactions case to case basis, and based on the kind of the operations which the CD is into. Like for example, in one of our experiences with poultry CIRP, the majority of the poultry business is unregulated, and the transactions were done on cash basis. So here we have to examine the transaction based on the facts and based on the kind of the sector which the company is operating. So preferential transactions, when we come to preferential transactions under section 53, so the transaction is considered to be avoidance, the transaction which is specific to be, the transaction would have occurred within a specified time period, that is prior. Looking back period is again 2 years for the preferential transaction. So I think it has come twice. Sorry. So basically, preferential transactions are essentially the transactions where an insolvent CD makes a transfer or for the benefit of a creditor, so that such beneficiary would receive more than what it would have otherwise received through the distribution. So the use of term preference here to denote an act of paying or securing to one or more of his creditors by an insolvent corporate debtor the whole or part of their claims to the exclusion of the rest. That means he is giving preference over other creditors who are on the similar terms, who are on the similar category. So in India, the legal position pertaining to identification and of avoidance transactions are under for the CDs under CIRPR section 43 and 44. So 43 is a transaction entered is said to be a preferential if there is a transfer of property or an interest thereof of the corporate debtor for the benefit of a creditor or for a surety or a guarantor for an account of a financial or operational debt or other liabilities owed by the corporate debtor. or the said transfer has put such creditor or surety or guarantor in a beneficial position, and such transaction does not fall in exceptions. There are some exceptions. So the transfer was made in the ordinary course of business or ordinary course of financial affairs. So such transfer creates a security in property to that extent secures a new value and was given at the time after signing of a security agreement. That means, for example, there are two creditors, there are three creditors, A, B, C, and all are on the similar terms, and one of them is a related party. And instead of when it comes to the repayment to all of them, the due dates, based on the due dates or the terms, all are equally placed, and you are giving a preference of payment to the related party creditor. So these kind of transactions are creating a separate security for the in the interest of only one creditor who is interested. So here we have one case law. So it's only just by a book entry set off the related party. So the book entry is only to set off related party book entry, that is setting off one receivable from related party with the liability of another related party, which resulted in transfer of property. This is a preferential transaction. So this was in the case of Chetan Shah versus Jayesh Vinod Walia, where it was provided that a repayment of loan to a related party within 2 years towards antecedent debt in preference to others. So the similarly placed lenders, even the CD had a similarly placed lenders, but whereas a preferential transaction was done, and the repayment has the effect of putting the related party in an advantageous position. So the related party is in a more advantageous position than the other creditors who are entitled for the distribution under section 53. So in this case, there are other creditors of the CD, including SASF, one of the FC, who are unsecured and were similarly placed with the related party. So the alleged payments have been made in preference to other creditors. So here around 1.15 crores of preferential transaction was done, and the respondents here were related parties. So the NCLT has held they are liable to refund this money to corporate debtor under section 44. So as regards this amount realized from sale of these assets, that the applicant has identified the repayment made to the related party. So the book entry was given as if the effect of setting off one receivable from the related party with the liability of another related party. This was a book entry to set off against the related party, and there was a transfer of property. So it has made some advantageous, it has bought the advantageous position to one of the related party creditor. So the NCLT has said, even though the same is represented by the book entry by which the property was sold, so uh, the party who has realized the money from the sale of these assets is liable to refund this money to the corporate debtor. Then one more case law here is Anuj Jain IRP for JP Infotech versus Axis Bank. This is in the Supreme Court judgment. In this matter, the court has laid down the key principles for identifying the preferential transaction. So the court has distinguished between section 53 from section 328 and 329 of the Companies Act, and here the court has clearly specified the clear ingredients of section 43 transactions. So the transaction is deemed to be a preferential transaction, that is the 43(3)(a), that stipulates that a transaction is exempt from being treated as a preferential transaction if it was carried out in the ordinary course of business or financial affairs. So here the Supreme Court has observed that a purposive interpretation of Section 43 demands that the transaction should have been done in the ordinary course of business, and the corporate debtor or the transferee should be interpreted as corporate. So here when we come to the section 43 3a, the words in section 43, the phrase corporate debtor or transferee should be interpreted as corporate debtor and transferee. So Supreme Court has observed that for a transaction not to be considered as a preferential transaction, that should have been done undertaken in the ordinary course of business, and for financial affairs not only of the transferee but also of the corporate debtor. Here again the Supreme Court has not defined what it is, what the phrase financial affairs. It has only described the ordinary course of business. So the ordinary course of business is not defined under IBC or even the financial affairs. Here in Anuj Jain case, the Supreme Court has applied the interpretation of the High Court of Australia in a matter of Downs Distributing Company Pty Limited versus Associated Blue Star Stores Pty Limited, wherein it was held that ordinary course of business means the transaction must fall into place as part of an undistinguished common flow of business done, that it should form part of the ordinary course of business, calling for no remark and arising out of a particular specific special situation. That means some 2-3 catch words here. See, the ordinary course of business must fall, which should be common flow of business done. The business, the ordinary course of business is common flow of business, and ordinary, the transaction should form part of ordinary course of business, and the transaction is not out of any special or particular situation. So here again, once again, I'll reiterate, the ordinary course of business is interpreted, but the financial affairs is not interpreted. So for determining whether an alleged transaction entered with the related party was done in the ordinary course of business, the Supreme Court again analyzed the unique nature of relationship. So again, the unique nature of relationship. That means here, see, basically here a special purpose vehicle, CD is a special purpose vehicle where mortgaging its assets to secure the borrowing of its parent company cannot be construed to be in the ordinary course of business. Suppose the CD is a SPV, and the assets, mortgaging its assets, the CD assets were mortgaged to secure the borrowings of parent company. So the SPV CD has mortgaged its assets to secure borrowings for parent company is not in the ordinary course of business. So Supreme Court has held that it is not in the ordinary course of business, hence it's a preferential transaction. Then again, once again, just the look back period for examining preferential transaction is unrelated parties, it is 2 years, and with the related related parties it is 2 years, and unrelated parties it is 1 year. So related parties often has a superior information of the CD and they may collude with the CD to siphon off its assets. Hence, the cutoff date of CIRP, that is commencement to look back period for preferential transactions, is 2 years. Then undervalued transactions under section 45. So undervalued transaction is defined under section 45 is one of the intention of keeping assets of the CD beyond the reach of any person, that is, who is entitled to make a claim against the corporate debtor. So the transactions that are entered either with a malified intention causing wrongful gain to related party at the expense of other stakeholders. Alternatively, there is a situation wherein corporate debtor who is in need of a cash may sell assets quickly at a price significantly below. So in order to achieve a quick result without having like approaching any at arm's length, they are selling it to related party. So under IBC 45, section 45, so if a transaction is considered as an undervalued, if the corporate debtor makes a gift to any person or enters into a transaction with a person who involves which involves the transfer of one or more assets by the CD for a consideration at a value which is significantly less than the value of consideration provided by the CD. That means again the benchmark is the arm's length price, then again the market price. Suppose if a transaction is entered with a person for the assets, for the transfer of assets, the consideration is very significantly less than the market value or the arm's length, then that is an undervalued transaction. So, and even that transaction has not taken place in the ordinary course of business. So, these are the few three benchmarks for the undervalued transactions. In again IDBI Bank versus JP Infratech, so NCLT Allahabad bench has held in the matter of the transaction can be said to be an undervalued if the consideration for entering into the transaction was significantly lower than what it would have otherwise been entered at an arm's length basis. So this is the basis, significantly lower and arm's length basis. So here it's relevant to note, like in preferential transactions, a transaction is exempt from being treated as an undervalued if such transaction was not done in the ordinary course. Hence, once the RP identifies and determines on these undervalued transactions, the RP has to go to the adjudicating authority, which will adjudge on these transactions and may pass the order restoring the position as it existed before such transaction or reversing the effects of such transaction. So here the recourse is either restoring the position as it existed before that transaction or reverse the effects of such transaction. So again here the look back period for undervalued transactions is again the same, 2 years for the related party, and for the unrelated it is 1 year. So the rationale for a longer look back period is that the management which has better knowledge may enter into transactions to strip the corporate debtor value upon receiving early signals of financial trouble. So basically here the point we need to understand is, once there is a the related party sense there are early signals of financial trouble, they'll try to do some transactions with the related parties to strip the CD from the assets which are valuable. So RP has to examine these undervalued transactions during the CIRP process. So basically extortionate credit transactions is a transaction which is done which are unconscionable under the principles of law. That is the CD has entered into a contract where the transaction is done to extortionate the benefits from the corporate debtor. That means they are trying to extract the extortionate the value of the CD. Here the related party is again look back period is 2 years. It is relevant to note, in the case of preferential transactions, the look back period is 2 years, regardless whether the counterparties are related or unrelated. So basically the preferential undervalued extortionate transactions, the criteria and the conditions are given clearly under the relevant provisions, and also NCLTs have clearly interpreted the ordinary course of business, arm's length, and even the some 4 5 principles were established for filing these transactions. And to get a order against these perfect transactions, RP has to appoint a transaction auditor, and RP on his own can verify and determine on the transactions and file an application. As it is a technical job, practically the RPs are appointing the transaction auditor, and based on the report and on the own analysis of the transactions, the RP has to carefully analyze and take note of the important principles and precedents set in the regard of perfect transactions, and pursue the application. In some of our cases where we filed perfect applications, many of them NCLTs, as you are all know, many of the cases filed under perfect, there are very few cases where there are orders from NCLT holding the preferential transaction, the avoidance transactions, because the basis has to be clearly established, and the counters are also filed. In some of our cases, just for example, in one of the case, the promoter has transferred the cars in favor of the related parties and the management team. So the NCLT has held a view that this is the ordinary course of business, hence it will not be a preferential transaction, although the transactions were done to the related parties of the promoters. So the other one is under section 66. We have a fraudulent transaction. Here would like to mention that the transactions are done with an intent of to defraud the creditors and with a fraudulent intention, and they will carry on the business in such a manner that there is a fraud in the corporate debtor, and the proceeds are used by the management or the related party. Then here the look back period is not there, because once a fraud is always a fraud. So the establishing a fraud is very critical by RP. RP has to establish the fraud beyond doubt. So here fraudulent or wrongful trading is, it can be during a CIRP or prior to CIRP. If the business is run so that the business is done with an intent to fraud the creditors, and that it is done for fraudulent purpose. So here in IDBI case versus JP Infratech, the NCLT has held that a transaction can be considered as fraudulent or wrongful, depends on the again the facts and circumstances, and is also a subjective assessment. So whether it can be demonstrated. See, some 3 4 the catch words, phrases they are using. One is facts and circumstances, and subjective assessment, and the demonstration of the transaction. The transaction has to demonstrate clearly that it was done to defraud the creditors of the CD. So again, the transactions under section 66, there is no look back period for identifying. Once a fraud is always a fraud. So here the related parties of the corporate is corporate debtor is liable to make the contribution to the assets of the CD based on the AA orders. Then again, see, if one more here is, before the ICD commencement date, if there are any wrongful trading or fraudulent trading, and the director or partner knew or ought to have known that there was a reasonable prospect of avoiding that uh, trading. So by that fraudulent trading, if the director has not exercised due diligence, and because the director has not exercised the due diligence, there is a potential loss to the creditors and to the CD. So here the AA adjudges a transaction as fraudulent if the related party, that is the liability of any person, will arise if they found guilty of committing such wrongful trading, fraudulent trading on any debt or obligation due from the corporate debtor, and even if it is done by way of mortgage or charge or any creating any interest or mortgage in the charge of on the assets of the CD. So additionally, AA has passed an order in relation to a person who is a creditor that it may direct that the whole or part of the debt owed by the CD to that person shall rank in the order of priority of payment. So here, basically the wrongful trading or fraudulent trading has taken place, and the persons who are in charge, like director or partner, has not taken exercise the due diligence for minimizing that potential loss. Then the persons who are in charge and who are the directors or partners for the CD managing the transaction that time, they are held responsible for such transactions. So in one of the cases in JR Agro Private Limited versus Swadhisht Oils, NCLT Allahabad bench has held regarding the priority of related claims. In the instant case, a related party was obtaining approximately 62% of its dues back, while the operational creditors were receiving nothing. So here, the resolution plan was approved, wherein 62% of its uh, proceeds from the plan was getting to the related party. Here, it was beyond imagination. So here, see, basically here the case was filed. Then arguments by RP was saying that the approval of resolution plan by AA is only a mere formality, because already COC in its commercial wisdom has approved with 100%. And even here the RP was saying, contesting that the plan has satisfied all the compliance requirements of section 30, and it was also clarified that the operational creditors recovery to the liquidation value was almost nil. So as per regulation 38(1)(b), the liquidation value due to OCs should be paid in priority to any FC. And this also compliance, if you see, the operational creditor has nothing, is almost like nil. So as in operational creditors after meeting the FCs was almost like nil. So any payment to be made to such operational creditors over and above to be considered as a bonus. So what RP was saying is, whatever COC has approved the plan, and we have complied all the compliances. So even if OCs are not getting anything, it is not a non-compliance. So the observations by the bench was, the UN Citral legislative guide provides for subordinate ranking or of related party claims as regards ordinary unsecured loans. So relying only on the particular case is a glaring example where admittedly a related party is getting priority over OC. So under the Unicitral legislative guide, related parties claims rank inferior to the claims of similarly placed other unsecured creditors. So even in the code, unsecured FCs, even if related parties, rank higher than the claims of unsecured operational creditors. So promoters loan to the company is similar to equity participation. So even otherwise, the waterfall mechanism should not be merely applied by the books. So if we ignore the spirit of this law, in every case of default or loss making companies, the liquidation value of OCs will always be nil. So the bench examined that it may change or rearrange the priority of claims to prevent a creditor who has committed fraud or acted inappropriately to gain advantage over other creditors. Thus, NCLT ordered that the related party claim should be treated in the category of equity shareholders. So, thus categorizing it under section 53(1)(h). So, they have categorized these as a equity shareholder below the rank of unsecured financial creditors. So here we'll touch base on some of the judicial pronouncement regarding the related party. Here a case is filed before Honorable NCLAT whether Kamala Mills and Fascu Investments, who were made part of COC, are related parties. Here again the same case which we discussed about Phoenix ARC and Spade Financial Services, where the Kamala Mills and the Fascu Investments are related parties in terms of section 524F and section 21. They are not entitled to participate in and vote in the COC. So here whether IRP or RP can constitute COC based on submission of claims only, admit related party without verifying. So here the court has held, the NCLAT has held, the constitution of the COC violates the provisions of section 21(2) read with 12(3). Therefore, the constitution is a nullity in the eye of law. So here the COC was constituted with a related party. A liquidation based on the resolution which consists. So basically what has happened here is the related parties were part of the COC and they were there till the resolution process was continuing, and instead of going for the resolution, these interested related party COC members have pushed for liquidation of the COC. So these two related parties were 77% voting rights. So here the NCLAT has said that they are related parties and they have voted, which is having a grave concern to the CD. So here the COC itself constitution is found to be tainted. So COC decision cannot be validated on the pretext of commercial wisdom is what held here. So here RPs have to ensure that the related party, even if you constitute with COC with related party, ensure that they try to get the details from the available sources or from any portals, or you can like nowadays many third party vendors are available from where you can try to get the related party examination, because once the COC is wrongly constituted with the related parties, then the commercial wisdom will not be validated and it will be tainted, and the decisions taken will be not in the interest of the corporate debtor and stakeholders. It will have a grave concerns to the CRP process and its stakeholders. This was held in the case of Jayanta Banerjee versus Shashi Agarwal, liquidator of InCab Industries. So here again, in one of the cases, Radha Industries versus Jayashree Iyer, RP for Bhadreshwar Vidyut Private Limited, NCLT Chennai again pondered upon the point whether on assignment of related party, assignee becomes related party. So this was already discussed. Then again, one more interesting case law is Telangana State Trade Promotion Corporation versus AP Gems and Jewelry Park Private Limited, wherein Honorable NCLAT, the issue discussed here is whether an authority to appoint a nominee director and the power of affirmative vote make the creditor a related party. That means the Telangana State Promotion Corporation, they have appointed a nominee director. Whether that power of affirmative vote to appoint a director makes the creditor a related party. So here the company has a control in regard to the arrangement of board of directors. The appellant comes within the purview of related party. Here the appellant is a related party, that is the Telangana State Trade Promotion Corporation is a related party, and they were as a member of COC. Is the tribunal concurred with a view arrived by AEA that they are a related party. So the directions were issued in the order that the RP shall reconstitute the COC, treating the appellant as related party, and the appeal was failed here because the Telangana State Trade Promotion Corporation was an authority to appoint a nominee director on the CD is a related party. Then in one of the case in Sai Peace and Prosperity Apartment Buyers Association versus Ask Investment Managers, the Honorable NCLAT dwelled upon the issue whether participation of the financial institutions in the management based on the investor agreement categorize them as a related party. Here, see, the Ask Investment Managers had an agreement with the CD. So based on this investors agreement, they were controlling the financial institution. They were also managing the CD. So here the investment management company was taking part in the management of the CD based on the investor agreement. And in order to determine whether related party, whether ask investment management, whether this investment management company taking part in management is a related party. So here the nature of transaction entered between the party and the CD was examined, and the influence and the interrelationship between the parties. Here the respondent has taken all the trappings of a related party, even though they are taken that they have a shareholder agreement, and it was they were trying to take shelter under the SSHA, which gives a nominee directors on the board for participating, and even though it was a financial institution, the NCLAT has rightly held that protection from exclusion can only be given to play financial institutions who convert their debts into equity. So even if the investor is controlling the board and affirming the decisions in the interest of participating investors, it still falls under the category of a related party. Hence, they were excluded from being part of the COC. So basically here just wanted to just have few more points about the liquidation process also. During liquidation, the liquidator also need to verify on the avoidance transactions and file necessary applications, and moreover the liquidator will not sell the assets without the permission of the adjudicating authority by way of a private sale to a related party. Even some concepts of related party also to be examined during the liquidation process. So these are the few areas which I thought I'll just update the members at the webinar. If I have missed out or any of the members have any more experiences regarding the related party transactions and the best practices during the process, I request members to kindly share their views. Ma'am, you are on mute, ma'am. Sapna, ma'am.
Hello, ma'am. Ma'am,
Hi, ma'am.
I have small query regarding the related party transactions. Ma'am, in one of my case, there was we have done the transaction audit, and we have filed the report to the NCLT. Now the date is on the 19th March. And as we are going to complete the period also on the 15th March. So whether these recovery proceedings in this case will be go parallel with the liquidations?
Uh, Ma'am, actually, see, basically here, when you passed a resolution for pursuing the PUFE application, you would have passed a resolution in the committee of creditors that who is going to pursue the application once the resolution process is going to conclude. During liquidation, there should have been a resolution passed at the COC meeting.
Okay.
So basically, if the resolution is passed that during liquidation it will be pursued by the liquidator or it will be pursued by one of the financial creditor, then a suitable memo will be filed with the NCLT saying that in place of RP on passing of the liquidation, liquidator will pursue this application. So in one of our cases in NCLT Amaravati, we were resolution professional, but the application was filed for adjudication of PUFE transaction. So the application was filed during CRP, and we were only appointed as the liquidator. So we have filed a memo saying that liquidator will pursue this same application. So NCLT has allowed this, and now the liquidation sale as a going concern is concluded. So we have passed the resolution during CRP process that one of the FC will pursue this application. Even CRP is concluded, liquidation is concluded, then the one of the creditor will step into the shoes of the applicant because the recovery proceeds will go to them.
Okay.
So if it is not done in the process, you can take one circular resolution by email.
Okay.
You take a circular resolution approval, maybe 51% approval is sufficient. Then you can suggest to COC that during liquidation, the appointed liquidator will pursue the application in place of RP. Or if any, after liquidation, or if any FC is interested, that also to be safer side, you pass a resolution suitably and file a memo with the NCLT.
Okay, ma'am. One more question, ma'am. Ma'am, it is mandatory liquidator is to be changed from the RP? Means both other must be different persons? Or it is just a...
Ma'am, actually, yeah, ma'am, actually recently there was an circular or some notification has come from IBBI saying that if there is a failed resolution, the same RP cannot be appointed as liquidator. And some of the NCLTs have an internal instruction that is off the record. NCLT registries have informed us that there is an internal circular that they can recommend a different IP as a liquidator who was not an RP.
Okay, ma'am. Thank you.
Mostly some financial creditors are also not interested in case of failed resolution. Even FCs are also insisting for a different IP as a liquidator.
Okay.
Any more questions? Or anyone wants to add on their experiences during the process?
Madam, if in the COC, if a non-related COC member assigns debt to a related party, what is the RP? Can he accept that assignment?
Ma'am, sir, assignment is acceptable, but when you reconstitute the COC, you will not take a related party, sir.
No, because the rights of the non-related party continue with the related party.
Sir, once
He was
unrelated
originally a
party,
non-related. He was originally non-related, so he was COC member. Now, if
sir,
it is assigned,
as the judge,
if it
sir,
is assigned,
in one of the judgment,
हो गया?
sorry, yeah.
ਹਾਂਜੀ ਕਹਿੰਦੇ ਮੈਡਮ ਨੂੰ ਪਤਾ ਹੋਊਗਾ ਬਾਕੀ ਉਹੀ ਕਰਦੇ ਨੇ ਸਟੇਟਮੈਂਟ ਦਾ
Sir, in one of the judgment, I will share the PPT. In one of the judgment, it is very clearly established that the presentio, the word is used as presentio. That means the present status of the party has to be taken into consideration by RP.
Correct. So the related
So
party
they will
then
not
takes
form part
the
of
shape
the
of a
CBC.
non-related party and he comes into the COC.
They will not, sir. Now it is very clear. The NCLAT has clearly given a. It was held. It was ruled that the related party, even the assignment of debt from an unrelated to related will become related, even if related to unrelated also becomes related.
Okay. Okay.
Yeah. We'll share the PPT, sir, where the judgments are given, where it's clearly held by the judiciary.
Right, right.
Okay, thank you.
So, any more questions or queries or experiences? Anjali, ma'am?
Yes, ma'am.
Yeah. You have anything to say or so any more queries or any in chat box, are there any queries?
No, ma'am.
Okay. So it was, thank you for patient hearing.
There
Hope
are no
it
queries.
was clear. We can share the PPT to the participants, Anjali ma'am.
And can we conclude now?
Yes, fine.
Very much thank you, ma'am, for taking session and on the topic related party transactions under IBC and Companies Act. Thank you very much for sharing your experience and learning with us. The session was very insightful. Thank you very much, ma'am.
Thank you.
Thank you,
I
ma'am.
thank all the participants and I thank ICSI IIP for giving me the opportunity. Thank you all. We can get in touch. I'll share my, Anjali has my number. Thank you.
Okay, thank you, ma'am.
Thank you.